All right, let's talk crypto volatility. But we're not just going to talk about it today. We're going to stare right into its heart. We're going to dissect a full-blown crash, piece by piece, using the wild story of Dego Finance. This is what happens when a token's price doesn't just dip, it absolutely free falls. Just look at this number for a second, -49%. Now imagine that's your portfolio. You check your phone and bam, in a flash, almost half of what you put in is just gone. This isn't some made-up scary story either. This is exactly what happened to folks holding the Dego token. And get this wasn't some slow burn, a train wreck you could see coming from a mile away. Nope. As one source put it, this was a catastrophic collapse in just 60 minutes. 1 hour. I mean, that's the kind of speed that'll give you whiplash. It's honestly pretty terrifying.
All right, Section 1, a 60-minute collapse. Let's really deconstruct this freefall. We're going to rewind the tape on this single hour of just pure chaos. And hopefully we can find some lessons buried in the wreckage.
So here are the hard numbers, and man, they are brutal. On June 4th, 2025, Dego Finance went from $2.63 all the way down to $1.33. That's nearly half its value completely wiped out in the time it takes to watch an episode of a TV show. Just let that sink in for a second.
Okay, so what was Dego Finance anyway? I mean, how does a project that has a pretty cool idea, a real vision, just fall off a cliff like that? Right, let's pop the hood here and see what was really going on.
So at its core, Dego Finance wanted to be a kind of launchpad for new Web3 ideas. And they had this really cool analogy. They called themselves the Lego bricks of DeFi. The idea was that they would create these financial tools that other developers could just snap together, Just like building with Legos, but for building new apps in crypto.
And look, this wasn't just some vague idea on a white paper. They actually built out a whole ecosystem. We're talking an incubator for new projects, Delta for launching and staking, an AI tool for creating NFTs, even a decentralized voting platform called Devo. I mean, on paper, this was a really ambitious setup, which frankly makes the crash even more shocking. Okay, but this is where it gets really, really interesting. You've got this clash between the vision and the reality, right? In one corner, you have the fancy marketing terms, Lego bricks for DeFi, open NFT ecosystem. But in the other corner, you have the brutal reality, a whale dump, a Binance monitoring tag, and predictions of a 98% loss. It's just such a massive disconnect. And you got to ask yourself, how is anyone supposed to make sense of that? So let's dig into the anatomy of the crash. We're talking a perfect storm of events here. What on earth could be powerful enough to yank a project like this down so hard, so fast? That really is the million-dollar question, isn't it? What kind of perfect storm creates this level of chaos? So let's break this down step by step. First, right before the crash, Dego announces support for this politically charged stablecoin, USD1. That definitely raised some eyebrows and probably made some investors nervous. Then you get the trigger. A whale, a massive holder, sends over $250,000 in Dego to exchanges. That's the signal. Panic sets in, over 650 grand in long positions get liquidated, the biggest liquidation event in Dego's history. And from there, the price just collapses as everyone else scrambles for the exit. And I mean, just look at this. The market data was practically screaming at people to sell. The AI consensus? Strong sell. Moving averages? Strong sell. Momentum indicators like RSI and MACD? Sell. It was just an overwhelming wall of red flags. The writing was on the wall, in giant flashing letters. And if all of that wasn't enough, then it came this bombshell. Binance, one of the biggest exchanges in the world, slapped a monitoring tag on DEGO. Now, that is a huge institutional red flag. It basically means, hey, we're watching you, and we might kick you off our platform. For a token like this, getting delisted is pretty much a death sentence. So what can we actually learn from this whole mess? This is where we connect the crash to some really common mistakes. Let's call them the 7 trading sins. Let's zoom out from just Dego and see what this tells us about trading in this wild, unpredictable market. Yeah, we've all seen these mistakes, right? The get-rich-quick dream, trading with zero plan, trying to chase the news. But the big one, the one that's super relevant to the Dego story, is copy trading. Just blindly following what some big influencer or whale does without having your own strategy. And this source material couldn't be clearer on this. This quote just nails it. If you want to be a successful trader, copying other people is not going to get you there. It's so true. When you copy trade, you're not just following someone else's moves, you're taking on all of their risk with none of their knowledge. It's a recipe for disaster. And the Dego crash? It's a textbook example of this. The whole thing was kicked off by one whale deciding to sell. That single move got amplified by thousands of smaller traders who saw it, panicked, and sold too. They were basically copy trading the whale right into a disaster. It was a classic case of lemmings following the leader right off a cliff.
Okay, so how do you survive in this Wild West? How do you navigate a market this chaotic? It's not about predicting the future, it's about being prepared. So let's get into our crypto survival guide. Look, the advice here is actually pretty straightforward. It's not rocket science. Step 1, do your own research, DYOR. Understand what you're buying, not just the hype. Step 2, diversify. Don't put all your eggs in one volatile altcoin basket. Step 3, use risk management. Things like stop-loss orders can save your skin. And step 4, the golden rule we all know but sometimes forget, only invest what you can truly afford to lose. Seriously. And that really brings us to our final big question. After watching a story like this unfold, you just have to wonder, in this crazy corner of the crypto world, is this insane volatility a flaw in the system, or is it the whole point? Is the chaos, the wild swing from massive gains to massive losses, is that the feature, not the bug? It's something to think about, and it's a question every single person in this space has to answer for themselves.